Hi folks, so we're going to do a quick analysis here. I apologize for not being so active. I've had some really uncomfortable back spasms and migraines for the last several days since Saturday morning, so I've been very uncomfortable. So I'm going to try to get through this as quickly as possible and then get back to resting. I don't have COVID, I don't have anything like that. It's just migraines in my back. Alright, so the dollar index, we can see we traded up above the 10761 level, found some support there, rallied. You can see that on the hourly chart over here. I felt the last time we spoke on a Friday that we would likely see it come back down in and revisit this area here, and I didn't do that. It vaulted higher, found some support here, went almost to consequent encroachment of the imbalance. I'm going to challenge you to look at on your monthly chart. Okay, that is a SIBI, so you'll see that range here if you go on your monthly chart for the dollar index. It looks like we could possibly trade up into 109.50, 110, as I mentioned. I don't recall exactly when, but I know I mentioned it in here. You could potentially see it traded in 109 to maybe 110 on serious strength, which we have seen, and it looks like it's trying to press even higher. We have parity on dollar and euro. That's something that I mentioned many months ago, last year and the year before that. I mentioned that eventually we would see parity on dollar versus the euro. Euro dollar on the daily chart, you can see we had that imbalance filled in 3 Indians, S&T divergence, the whole show. Went down below or low and keeps on digging lower, and that is a result of the interest rates increasing on dollar. That accelerates all of this. And on the hourly chart, you can see we have the imbalance here, worked up into that 2 times, but this sell-off here in the morning session was a result of this here. I think as long as the interest rates keep going higher on the dollar, it's going to further pressure all the foreign currencies as a result of that. Pound dollar daily chart. On Friday, when I gave the analysis looking for potential retracement on dollar, which is always going to be uncertain going into Sunday's gap, or Sunday's opening rather, because you don't know where they're going to open it. And again, because I didn't see the dollar index go lower, the pound dollar actually followed suit with the dollar index going higher and euro going lower. Cable followed suit with that as well. It looks like if we get continuation on the downside, go out to your monthly chart on pound dollar, you'll get this level down here around 114-ish, something to that effect. I don't have the exact level on here, but you'll see it on the monthly chart, which is an old low. That may be where we cascade with a big drop. In other words, if we get a big capitulation on the dollar, in other words, moving above 110, maybe 111, 112 on dollar, that would send cable likely into that level down here, or at least try to gravitate towards it. On the hourly chart on pound dollar, just a real mess. We had a little bit of an imbalance here that was utilized, and then just sloppy in the morning, and then pressured down for sell side liquidity here. So lower prices on foreign currency, higher dollar is basically what we're getting at. EMA S&P, I mentioned on Twitter this morning we'd likely draw into these lows here, and 137.41 was the level here. Then we have this low here as well, which I kind of like kept to myself, but you can actually see me utilizing the fib in the recording I posted on Twitter. We have relative equal highs here. I think we could possibly see 38.80 if we continuously rally up. Watch this imbalance in here. If we drop down into that and start to spring higher, we'll run for buy side here and then here as well. Otherwise, if we go back below this down close candle, it's going to resume going lower, and this low will be the point of interest for us. So get your reference points here. These are the relative equal lows, the light blue line. The dark thick line here is this low, which is that daily low. Wednesday's low, in other words. Then we have this low here, the dashed line. The dashed line here is around the 37.35 level. So there's liquidity below that, or was. 15-minute time frame. You can see we traded lower initially on the day. That was the only move I wanted to participate in. I felt the draw on liquidity down here would be the main focal point for today, and ended up basically becoming the low of the day. And over here on the hourly chart, you can see early morning, we had a SIBI here, bodies of the candles respecting that. We had a shift in market structure here. You can see that in lower time frames. SIBI, we traced back into consequent encroachment. Buy side liquidity forming here. I focused on this one initially, and then we have it running that buy side, breaking down. And then we see the shift in market structure here. That's actually on a 1-minute chart, and it's probably not so clear in the static chart I posted on Twitter this morning, but obviously it's on a 1-minute chart. And market breakdown, trades back up at 9:30. Here's our Judas swing. So we had all the backdrop over here that it's likely to go lower. I gave you the 37.41 sell side liquidity in advance, and then the market broke at a fair value gap here, traded back up into that, and then broke the low. In this low, I took profits and did a measurement from the high to low in Fibonacci extension. That was what I was using, which is also below 37.35 for sell side. For a 2-minute chart, you can see the fair value gap in here. I missed this, did not have Camtasia running. I'm out of sorts, and I just didn't have it on at the time. And once I got the recording started, I just used a close proximity entry, which is this candle here, this big one here. When price was trading at it around it, I used that as my basis for entering short. And the reason why is if it came back up, this could have went up to it and touched it again. So that would have been an area I would have went short anyway. So if I'm getting in that area as a close proximity entry, it's not chasing price because it's something I would have utilized later on in the day as another additional entry or an isolated entry in itself. Shift in market structure, here's your 3 candles. Breaks down fair value gap on the 2-minute chart being shown on the 1-minute chart. The entry here, fair value gap, which you'll see trade to. Breaks down. Here's the exits that I did. I actually did a recording. I'm not sure why Twitter didn't show it when I first put it up, but it's apparently showing now. And it went lower. As a result, I tweeted, pay the trader, and it was in low, so prior to this run up. Right, and on the 15-second chart, this is what I was looking at in my own charts. Not just looking at a 1-minute chart, but because I missed the entry taking the buy stops here, because I missed the entry on the fair value gap on the 2-minute chart when it hits here. I missed all of that. So by the time Camtasia finally opened up and the recording started for me to share the execution, this is what I was looking at. There's the 15-second chart. And I know some of you think this is, ridiculous. Like, why am I using this? I want you to see what I was looking at. Because I missed this run here, it ran buy side. So this run up here and here, that's a breaker. Okay. I also saw this as a breaker. So if you look at it like this, that being the breaker, that down closed candle here, I want to be entering in that. That's here. So my candle of entry is here. I'm utilizing that. I'm seeing this as short-term run on stops, just like this was a short-term run on stops. So we had 2 buy-side liquidity runs and the likely draw on liquidity down here where sell side would be. So I'm using a premium from high to where I think the market's going to go. I'm entering on a breaker after the Judas swing, after another stop hunt. So there's 2 stop hunts. I'm looking for it to accelerate on the downside. Even if I would not have entered here, I've had all these opportunities in here to enter. Extended that breaker out. So this candle here, this down close candle, extended out in time, gave us multiple opportunities to get in. Even though each one's 15 seconds, it's still a minute or so to do something with it around that price level. Trades below the 37.41 quarter, sell side liquidity, and then the extension I used for the Fibonacci, which takes us down into here, below the 37.35 level, which I did not share on Twitter, but you can see it on the daily chart, as I mentioned at the beginning of the discussion. And that is going to be it. I will touch base with you, Lord willing, on Friday, but if I don't feel up to it, folks, just let me have it until Sunday to get back with you. Just not feeling very well. Till then, be safe.